Welcome aboard, guys. If you're here for the Norada Capital webinar, you're in the right spot. If you're not here for the Norada Capital webinar, you might want to leave the room. And Marco, just so you don't mind, I've got the investor slide deck pulled up here. So if you want me to refer to anything or go through anything, as usual, I can share my screen and we can walk through a couple things.
Should we do the basic overview of Norada Capital and what we are and what we do? Just kind of an overview, and then I'll let you take it wherever you want.
Yeah. Well, let's we usually start with some intros here, so good time to kind of kick it off. And so welcome aboard, guys. We'll get started here. It's 11:03-ish. We're usually on these webinars for 45 minutes to an hour, just depending on how many questions you have. A couple ground rules. There is a Q&A box that you can put questions in. We usually get to those questions towards the end of the webinar. Sometimes they correlate directly with what we're talking about, so we might answer some of those while we're doing the webinar. So you use the Q&A box to ask questions during the actual webinar. I will be using the chat box as well to put in some links that you guys can copy and paste and follow, and things like that. So that's different than the Q&A. The Q&A is a whole list of questions from you guys. The chat box is kind of used for me sending out links to the entire group. So again, welcome aboard here. This is a webinar on Norada Capital Management today. We're going to be talking about the fund itself, the opportunity, the promissory notes, what backs those promissory notes. So by the end of this webinar, you should have a very clear understanding of what's going on. If you don't, you can always set up a call with us as well. We encourage that. Give a little bit about my background. My name is Nathan Hall. If you've spoken with me and you're on this webinar, I always like to say hello. So feel free to raise your hand, say, hey, Nate, how are you? If you haven't spoken with me, all good too. You may have spoken with Michael or John. How you doing there? So the background of myself real quick here, last 10 plus years, I've been growing in real estate. I'm a licensed agent. I work on the Norada real estate side. We sell investment properties. I've invested in, rental real estate. I've invested in notes and private money lending. I've dealt private money. So this is kind of the world that I've grown up in for the last 10, 15 years of my life. I've been with Marco for, 3-4 years now. I'm not sure how many years I've been with Marco, but I've watched him grow and expand. He's got a 2 decades old real estate brokerage. He helps hundreds of people a year invest in rental properties, single family up to 4 unit. He also has a promissory note fund, which is what we're going to talk about today. He's quite the serial entrepreneur. So this is my background. Marco's got an extensive background in entrepreneurship and business ownership. So Marco, I'd love for you to take 30 seconds for those of our listeners who don't know who you are. If you want to take maybe 30, 45 seconds, if you can do it that quickly. You don't have to be that quick, but
no,
would love to know more about you too.
Yeah, I'll give you the compressed version. So you were correct, Nate. I've been a serial entrepreneur my entire life, run a number of companies. The 2 largest of those companies are Norada Real Estate Investments. Started that 20 years ago. It's a nationwide investment real estate brokerage. And so, yes, we help hundreds of investors with thousands of, not thousands, almost 1,000, but 600 to 1,000 properties per year, turnkey properties in different markets around the country. Norada Capital is what we'll talk a little bit more about today, and then get into some Q&A and whatnot. By the way, just as part of the housekeeping, this is being recorded, and the link will go out to everybody with this podcast or this webinar recording. Also, there's a Q&A box. I always like to mention this. There's a Q&A box where everybody should put in their question, and we'll queue it up, and then we'll answer it later. Anyway, so yeah, I've been a serial entrepreneur, and I've been investing in real estate since I was 18 years old. Started Norada Real Estate Investments to help other investors. Norada Capital is a private equity firm, and I'll just kind of dive into that here in a minute. But I love what I do. I love teaching everything about business, entrepreneurship, investing, little bits and pieces about the economy, inflation, whatever else it may be. And I've invested in everything from cannabis to crypto to oil and gas, real estate, you name it. So I've cut my teeth on a lot of things. Real estate is one of my favorite, of course, but also being involved in businesses on the equity side of the equation has always been of interest to me as well. I can pause there and then transition into Norada Capital whenever you're ready, Nate.
Yeah, and just a side note, guys, Marco is extremely open and receptive with teaching people as well. I've seen him at live events. People come up to him at booths. So if you ever see him at a live event, you go to a Money Is event, you go to a real estate event, he's very open to giving advice on what he's learned, right? Which is really unique. So um, as far as the flow of today, again, there's a Q&A box. We'll talk about the investment here in a second. I think, Mark, let's do a little bit backwards today. Let's start with what a promissory note is. I think that makes more sense. And then I'll show the screen. We can
Okay.
talk about the actual note, the terms, the interest rates, and then we can go into what backs that, right? Because we'll talk about what's in the fund, what backs the note, what backs the investment. So if you want to give your typical background on what a promissory note is, that would be great.
Sure. It's very simple. I think most people on this webinar know what a promissory note is, but just in case for those people who are not familiar with it, it's just another name for a loan agreement. A promissory note is just an agreement between two parties, a borrower and a lender, and it just defines the terms of that loan. So if you've ever signed a signature loan, a car loan, a student loan, whatever, any kind of loan, it was on a note. It says note or promissory note. Occasionally it'll say loan agreement, but essentially it's a promissory note. So a note is just an agreement between parties that are borrowing and lending from each other and what those terms are. And that's the instrument, that's the vehicle that we use at
Yep.
Norada Capital to raise funds, raise capital, and then put that money to work, if you will. We use that within our fund to make acquisitions and build and scale the businesses that we have under management.
Right.
So
Right.
that's a
And
promissory note.
yep, super simple instrument.
Yep.
We, like you usually say, Marco, banks and businesses and raise capital with the use of the note every day, and then to the tunes of millions, if not hundreds of millions of dollars. So what we do is not very different or complicated compared to what other companies do to raise capital. It's using private debt, working with accredited investors. We are what's called a 506c Reg D offering. You can find our Edgar paperwork on the SEC website. It's a very simple instrument. And so I'll share the screen here real quick, and let's do a hypothetical. And I say, okay, Mark, I'm going to come to you. What's the minimum? What's the minimum investment? What's the minimum term? And you guys can refer to the investor slide deck here, which I'll share with you. If you're on this webinar, you 100% got sent this slide deck. It may have gone to your spam folder, right? But you certainly have received this at some point. So this is the actual breakdown of the interest, the terms, and what you get with the investment. So do you want to run through this, Mark, or do you want me to just run through it real quick?
You can run through it and then I'll add to it.
Okay. So again, guys, let's do a hypothetical. I'm coming to Marco, and Mark, we're raising private capital, and I'll say, hey, Marco, I've got, $50,000 I want to invest. What's the minimum term? First question he's going to ask me is just to clarify if I'm an accredited investor, right? Do I meet those qualifications? And an accredited investor there's an income approach and there's a net worth approach, right? Accredited means that you either have an income of $200,000 for the previous 2 years individually, or $300,000 combined with your spouse, or your net worth is over $1 million. So any one of those combinations can make you an accredited investor. And this isn't our rule, this is the SEC's rule. So as long as I'm accredited, Marco's going to tell me I can choose a term between 3 and 7 years, right? Those are my options for the term of the loan. And the minimum investment, as you can see here, is $50,000, right? A $50,000 investment up to $100,000 gets me 12% annually, and the monthly is paid distribution, or excuse me, the distribution is paid monthly rather.
Yep.
Anything over 100,000 is a 15% annual return. Again, that distribution is paid monthly. And then there is a bonus tier, what we call it. Anything over $200,000, again, a minimum 3-year term qualifies you for a 5% bonus. That bonus is based on the principal investment amount. So if I invest $200,000 for 3 years, 5% of 200 is $10,000. So at the end of 3 years, I get my final interest payment, I get my principal back, plus that 5% bonus, that $10,000 bonus, right? So there's kind of 3 tiers, 2 interest rates. These are fixed interest rates. These are not variable. So per your contract, let's say you sign a 3-year contract at 50K, that's in the fixed interest rate at 12%. We're not going to come back and change that to you to some variable rate. Again, everything's direct deposit to you, so it's a monthly payment. It's not a quarterly payment. Okay. So everything goes out usually the first of each month. Usually that I usually say within the first week, because sometimes the first falls on a Saturday or Sunday or something like that. So that's the basic breakdown, and we'll talk about what backs that investment, right? So again, it's nothing more than a loan agreement. You're becoming the lender, we're becoming the borrower, right? So you lend 50K or 100K to us, we're borrowing that at a certain interest rate, we're paying you that interest rate, and we're taking that capital and arbitraging it within our businesses and growing the companies. So hopefully I hit on most things there, Marco. If you have anything to add, please, of course, feel free.
Nate, I couldn't have said any of that any better than you did. That was perfect.
Okay.
It's like you heard it before.
Never heard it. Yeah, I've never talked about it or never heard it. So
Yeah.
yeah, and I think the biggest thing for a lot of investors is, okay, what is backing that investment, right? What's backing the notes? Because a lot of people they might have been private money lenders or hard money lenders on one specific deal, like one specific real estate transaction or one specific commercial deal or something like that. These are backed by a portfolio of companies, guys. So to me, there's security in that when there's multiple businesses backing your investment. We're not attaching your note directly to one project or one specific outcome. So to me, that creates a little bit better risk profile for you. Doesn't mean there's no risk, because there is risk in investments, but we have multiple businesses backing the note. So I'm going to stop my screen share here. You guys, again, can get this. I'll send you the link right now. I'll put it in the chat so you guys can have access to the actual, what we call the investor slide deck. So send that to you.
The one thing I'll quickly add to that, Nate, which I think we mentioned, and this is kind of the last thing I'm going to mention about promissory notes, unless someone has a question that they want to put in the Q&A box.
Yeah.
A promissory note, whether you're familiar with it or not, is one of the most common ways for businesses to raise capital. There's only two ways for a business to raise capital. It's either they issue shares and raise equity capital, or they issue debt and they raise debt capital. And this is done a lot every day of the year, all the time. It's so common. Everybody uses this, from banks and lending institutions to hard money lenders, to private companies, small, medium, even large, even publicly traded companies will often raise capital through a promissory note, a debt structure. Sometimes it's a convertible note where it starts as a promissory note and then converts in whole or in part into equity. So there's all kinds of flavors of it, but it's a very common investment instrument.
Yeah.
So I just wanted to make sure that this is not, if you haven't heard of a promissory note, this is not a foreign thing. It's used every minute of the day, every day, all the time. Correct.
And even when bigger companies are raising debt, or what's backing that debt is the equity and the company itself, right? So then that's what we'll get into right now, is what backs the note, what backs our investment is the portfolio of companies. So Marco, you do a great job at breaking down the three main categories, and really there's two big ones, right? We have a great space in e-commerce. We have a great space in mastermind education companies, which a lot of people don't understand the opportunity within, like the live event space and the mastermind education space. They're very high yield service-based industries, and they're tremendously successful, especially when we get into Aspire, what we'll talk about here. But let's talk about, e-commerce, I think, and the live event and the mastermind education space. And of course, there's other things that round out the portfolio. But those are the two big ones, right? So
yeah. So when we look at the two main areas of focus and investment within Norada Capital, each one of those could take over an hour just on its own, in terms of talking about it, presenting it, and discussing about the things we have going on in that space. But just to give you all a high level overview, the two main categories of what we are focused on and have invested in are e-commerce based businesses. Secondly, what I refer to as educational masterminds. There's a much smaller third category that I refer to as theatrical productions, which are the Broadway productions, the Broadway musicals that we're involved in, past, present, future. There's I think 12, I believe there's 12 of them right now. The most recent one was Cabaret, which opens up on April 20th, but I've already went to the dress rehearsal a couple of weeks ago, and it's looking like a great show, and Tommy is actually opened up the week after. So there was two back to back. Tommy, as in like the Who, the band, Tommy. The Who's is the band. Tommy was the name of a character in a song. Um, Getting great reviews, by the way. So the ecom business side of it is really mostly made up of name brand business acquisitions that we made. For example, Dress Barn, a nationwide retailer, apparel retailer for women, although that's been diversified now. They filed for Chapter 7 bankruptcy years ago, about 4 years ago, maybe a little over 4 years ago. We stepped in and gave them an offer, an LOI to purchase their intellectual property for, I think it was $5 million at the time. And that just simply means that we were offering to purchase their customer database, their trademarks, their brand name, the brand equity that goes along with it, their websites, and their domain names. And we fortunately and successfully acquired the intellectual property, and we took over that business, the online portion of it, own it, run it, operate it today, and generate sales from the traffic and the visitors and the customers that go to that website. That model proved successful. And then we did it again and again. We did it again with Pier 1 Imports. When they filed for Chapter 7 bankruptcy, we went in and did the same thing. It was a little more complicated and dragged out a little bit further. It was a more complicated sale, and we had a competitor. But we acquired that one for $31.5 million. So we own everything related to Pier 1 and all the trademarks that go under it. And there's several hundred of those. And then their customer database, their email database, well, actually a complete customer database, which is numbers in the millions of contacts. So we can market to those people. So Dress Barn, Pier 1, then we went ahead and did that with Linens and Things, Steinmart, Model Sporting Goods, Franklin Mint. There's a few others in there. And then another 900-pound gorilla, which I don't necessarily consider fully e-commerce because it's been focused on education, but it is an e-commerce business and brand that we are going to ramp up and scale. And that's bodybuilding.com, which is an international brand. And bodybuilding.com receives 4.3 million visitors a month. So it is a very, very well visited
Perfect.
trafficked, visited website. So we can certainly monetize that traffic.
Yeah.
And we're only scratching the tip of the iceberg right now. We actually bought that off of a billionaire who just didn't have the time for it and wanted to be a partner, and then ultimately said, well, I'd rather not be a partner. So we bought the other 50% back off of them from that. So that's the e-com space. The second category is just as large, if not larger. It's going to be much larger. And that's what I refer to as the educational masterminds. Nate referred to it as the event space before, and it's really a combination of the two.
Right.
So we have this world where we bring people into these major events each and every month called Aspire. It's the Aspire Tour. The website's aspiretour.com. So every month we have a major event, and we have anywhere from 2,000 to 4,000 plus people at these events every month. They're amazing. They're high energy. They're very professional. They're content rich. We have incredible speakers from Kevin O'Leary to Marcus Lemonis to David Goggins, Mark Cuban, A-Rod, you name it. I mean, you can see them all on the website at aspiretour.com. And, every time we have a new guest or a new speaker, we put them up on there. So it's just an incredible array of speakers. And what we do is we try and educate people on financial development, personal development, mindset, leadership, entrepreneurship, real estate. Those are the categories we talk about. And that's what we call the top of the funnel. That Aspire event drives people to two more events, the Masterclass and then ultimately the Mastermind. And the Mastermind is where we make the big money, the annual reoccurring revenue, where people are buying into our masterminds for education, community, the content, the regular live events that go on through the year. We have content posted every week, sometimes every day, but we have a live webinar every week. So it's just tons of value, and people love it. In fact, that's why I'm here right now in Florida, just facing the ocean here. Is because we launched tonight with our cocktail reception, and then we have our 3-day event starting tomorrow here in Ponte Vedra, Florida. So it's actually at the Sawgrass. So that's a big money maker. So Money is one of those masterminds. It's called Money Is. And then our real estate mastermind is called Level Up. It's Level Up Real Estate, and that they're both masterminds. They're actually sister businesses to each other. So when people come into our world, our ecosystem, we drive them into one path or the other, or both. If they're interested in real estate, they subscribe and become a member of Level Up. And if they want just general money education, how to make, grow, and protect, and there's a heavy focus on taxes or avoiding taxes legally and properly. That's all the money is side of it. So that category is a significant portion. It makes up 55% of what I call our allocation of funds, or in other words, our assets under management. So that's a big portion, and the two combined make up close to 90% of what I'll call our portfolio, or our assets under management, or our allocations, if you will. So it's exciting stuff. It's fun. If you're listening to this, look up, the next Aspire event. If you haven't been to one, I'd love to have you go. You'll love it. You'll enjoy it. And I encourage you to attend if and when you can. By the way, if you're in the Northeast or in the New York area, we locked down Madison Square Garden for July 20th, I believe it is. July 20th. So that'll be probably our biggest event to date. Miami's coming up soon in about a month, and then Orlando shortly after that. So if you're in the Florida area, you can look at joining us there. Anyway, like I said, these two categories, the e-commerce businesses, the mastermind businesses, I could talk for hours about each of those. So I'm going to just stop there because that gives people a good understanding of the foundation of Norada Capital as a private equity firm. And to you, it's an investment fund. It gives you the opportunity to get an attractive yield of 12% or 15% fixed per year, and the interest is paid monthly. So it's great from an investment perspective, especially if you have a self-directed account.
Yep.
And Nate, I don't know if we talk about the self-directed angle enough. People who have self-directed IRAs, 401ks, a Roth account, anything like that, a promissory note is ideal for that type of investment vehicle because it's tax deferred or it's tax sheltered.
And that gives me an idea, Marco. What I'll do is right now, I've been putting some things in the live chat box. I have the link right now to how to utilize, like the webinar we did on how to utilize self-directed IRAs. So I'll throw that in the chat box, that link, if anybody wants to just copy and paste that. That's a great point. I would say, I can speak for myself. I mean, 50+% of the investors that I work with utilize self-directed IRAs, right? They're very, very common, especially in the note world, because you're tax deferring an income stream, right? You are tax deferring the dollars. It's either a Roth or a traditional, right? But regardless, it's a tax sheltered vehicle. And it's phenomenal for any type of, if you're trying to create an income stream. This type of investment, by the way, to me, there's kind of two buckets of investors. There's an investor that's looking for tax sheltering, not really concerned about cash flow. And then there's the investor that's looking for income and cash flow. This is an income approach, right? This type of investment is, I want an income today for cash flow today. So it's a great option for those of you who are out here, they're looking for, income. I'm going to put in a link to that webinar, how to use self-directed IRAs. And I've also put in there, guys, if you look at the chat box, I've put in the slide deck, which talks about the actual investment itself, talks about the businesses, the Aspire Tour link. I just put in the IRA link, but I also encourage you guys to go, since, Marco's talked about how the two biggest portions in Norada Capital are the e-commerce space and the mastermind education space. Go to aspiretour.com, go to some of these e-commerce websites. I just sent you Pier 1, for example. You can go to any one of these sites right now in the e-commerce space and you can buy product. And I get this a lot, Marco, just to kind of stay in this space for a second of the two biggest pieces. People often ask, well, you're competing with Amazon. I said, well, of course, but at the same time, the e-commerce space is so large. Like if you get like a piece of that space, right, there's hundreds of millions of dollars to be made. So e-commerce is still very well and alive, if people are wondering. So with that said, check the chat box, guys. I know we've got some Q&A coming in as well. Marco, if you're ready to kind of round out what else is in the fund. I know we've do some land development. We've got Broadway. We've got Bitcoin. There's some more things that are in the fund that still create revenues and profitability. So can we talk about what else backs the fund there?
Yeah, so the third category we talked about is the theatrical productions. So that's a very small percentage. The real estate piece of it is also a small percentage. It's really just a new venture that I haven't put a lot of time into.
Sure.
And that's creating what some people refer to as extreme Airbnbs, which are just highly themed short-term rentals, that could be themed in any way. In Orlando, it might be a Universal theme or a Disney theme or whatever it may be. It's kind of over the top. Actually, for future webinars, I should just get the link to the YouTube video that has kind of a 3 or 4 minute sizzle reel that shows
Yeah.
the property that we built. It's pretty amazing, and people love it. Like they're always like amazed at it and want to stay forever. So it's kind of like a theme park away from the theme park.
Yeah.
And then some land development, but the land development is really more taking large parcels of land and subdividing it, entitling it, and turning it into buildable lots that builders buy because it's in the locations that they want to buy, but they don't want to buy and hold land on the books, so they just acquire it when they need it. They try to avoid having too many buildable lots or land on their books. So um, my partners through the RDL have sold thousands of lots to nationwide home builders. Stanley Martin and DR Horton are two of the major ones that we've sold to. The fourth category, that's the fourth category. The fifth category, I almost shouldn't really even consider it a category per se. It's more like what some people would refer to as cash equivalents, and that's just, some crypto holdings, because that can be just swapped back and forth between cash and crypto. Although, the right crypto can long term, long term, have a lot of alpha or high appreciation potential. It's definitely a long term holding. It's not a short term holding. So those are the five.
Love it. Okay. Yeah, and that's what rounds out what's in Norada Capital. So when you guys are creating the note, what's backing the note? Multiple businesses, right? And we're not tying your note directly to one of the outcomes of one of those businesses.
Right.
So I know we've got some Q&A. Could we get a couple things coming in here? Anything else that you think we should hit on, Marco, before we dive into some Q&A here? We've had it's funny, interesting. We got like an influx of participants, maybe like 15 minutes ago. I'm not sure if that was just something that happened by accident or whatnot, but
Yeah, I saw that.
maybe the first, maybe that big influx missed the very first part of our webinar. So
Well, again, this is being recorded, and for those of you that
yeah,
jumped on, in the last, I don't know, 10, 15 minutes or more, you can go back and just watch the first half of this, which we talked about, what is a promissory note? How does it work?
yeah,
Norada Capital, what is Norada Capital? What does it mean to you? What is the offering or the investment opportunity that's there? And then as a private equity firm, what is it we have in our portfolio, or what some people refer to as assets under management.
right.
So, and let's remind everybody towards the end as well that they'll get an email with a link. If you don't get it within the next 24 to 48 hours, just contact Nate or email us, and we'll send it out to you.
Yeah, and as always, if you don't see an email come in, check your spam folder, right? If you're on this webinar,
Yeah.
you guys are probably looking at other offerings as well, so you're constantly getting inundated with emails. Sometimes, especially, I know Yahoo email addresses are great at filtering into spam. So check your spam folder if you don't see it in the next 48 hours, but we do send out the replays. And for that matter, actually, it's a good idea, Mark. I'll share my screen again real quick. If any of you guys have questions, like if you don't know who your investment counselor is, or you haven't been talking to me or Michael or John, somebody on our team here, you can go to noradacapital.com here, and you should see it on my screen here. You can put your information in here, right? Yes, we do actually, if you're accredited or not, it's important because you have to be accredited to be in our fund. Or there's also a chat widget box down here where you can chat right into us and ask a question. So that's the easiest way to get a hold of us if you don't have our contact info as investment counselors. So just go to noradacapital.com, fill out this form, or go into the chat box. It's pretty simple to do. Just a little thing there to make sure people know how to get a hold of us there.
Yep.
Again, I put that in the chat.
Yeah.
All right. All right, Marco. So want to dive into some questions here?
Sure. I'll just grab the first one, I guess.
Yep.
So yeah, just as a reminder to everybody, if you have a question, general or otherwise, just drop it in the Q&A. Nate and I will do our best to answer them here. If for whatever reason, if we don't get to your question, just contact Nate, and he or the rest of my team will help answer them, whether it's by email and or phone. So always happy to help. Okay, so Gerard, can you break down the 5 major investments by percentage? Yes. So the mastermind businesses represent 55% of our asset allocation. The e-commerce businesses are about 35%, just under 35, but 35. And that makes up the bulk of it. What I refer to as real estate holdings is such a small sliver of what we're doing. It's about 5%. And then the crypto represents about 3%. And then something, I didn't mention because it's sometimes not worth mentioning. It's something that it's a business area that we're just expanding on. So I refer to it as our media business, and our media business used to be called In Pickleball, and now we've rebranded that, or we're in the process of rebranding that into Pickleball. Funny how those two words went together. But intopickleball.com is the website. There's a new membership site that's launching very, very, very soon. I believe it's supposed to be launched by the end of the month. In fact, there was a webinar, or not a webinar, a Zoom meeting about it earlier today. But In Pickleball was a magazine that we've been publishing for over a year. It's essentially the leading pickleball magazine in the country. We've had Katie Couric and Stephen Colbert and other people on the cover. Not that pickleball's about them. It's just they love pickleball and they want to be a face for pickleball. But it's a great, it's a very classy, well put together, high quality publication that people love to touch and feel and read. But we're turning that more and more into an online model because the revenues that we can generate are going to be far higher. We'll have a higher annual reoccurring revenue from it. We'll have a higher valuation because the multiples will be higher. You'll still have the magazine component to it. But our plans for that is to turn it into a media company, not just a magazine. So there's a shift in that strategy. So I refer to that as our media business. And that's just a very small portion of our allocation. I mean, it's less than 1%. So anyway, to Gerard's question.
Those aren't Gerard's. Okay, I see what you're saying. Yeah. Go ahead.
Gerard's question. So that's the asset allocation breakdown. So hopefully that answers your question, Gerard. Thanks. I appreciate the question. Shadron. I'm sorry if I'm butchering your name. How long have you offered promissory notes to accredited investors? This brings up a good point, the whole question about accreditation. So I started raising capital for different projects, not specifically for Norada Capital, 12 years ago, 2012. And in the first 4 years or so, it was always project specific. They had a finite capital raise. They were very specific as far as the project they were attached to. Some of it was oil and gas, some of it was real estate, some of it was cannabis. Then in 2015, I started raising capital full-time all the time for 3 straight years. And that was a real estate-based business, a real estate fund. And we were just churning over single family and duplex properties in the Midwest. And that was all about buy, fix, and flip. Some of it were retail flips. Some of it were turnkey rentals to feed the demand with Norada Real Estate Investments. It was basically another company set up to be one of the property providers for Norada Real Estate because we had a lot of demand and a shortage on inventory. So we probably bought, fixed, and flipped close to 300 properties back then. So we had millions of dollars of revolving capital that were being used almost like a line of credit, but on a 6-month note. It was just funds that were just being redeployed. And then as I transitioned out of that because competition increased, margins were decreasing. It was becoming a lot more work and a lot of brain damage. I wanted to get out of that space. So as I transitioned away from that, I found myself around the right people to work with and partner with to get into the e-com space and then go after, companies like Dress Barn, Pier 1, Linens and Things, et cetera. And so that kind of started, that was basically the starting point of moving away from the real estate space into the private equity world. And that's where Norada Capital came to be. So Norada Capital came about because of my growing interest and investment in ecom. So, so that's a long answer to your question about how long have you offered promissory notes to accredited investors. It goes back to 2012, but Norada Capital Management specifically is 3 going on 4 years right now. So did I miss anything on that, Nate?
No, I think you hit the nail on the head there. Um, Side note, Oren, I keep seeing you raise your hand. If you have a question, just use that Q&A box to type in there. I think you're trying to maybe raise your hand, ask a question, but you can use that Q&A box to put a question in there. So
Okay.
let's hit on.
Um,
So Doug Pearson asked about, paying 12 to 15% when you can borrow from a bank for a lot less. I mean, there's many ways you can answer that question. Businesses borrow money through accredited investors all the time and offer higher yield rates, 12 to 15%. Syndications might pay you 8% with a back end, multiplier. And at the end of the day, your return is going to be double-digit returns. I think, Marco, you give a good explanation of this where, banks don't always, the amount of money you're trying to raise, banks don't always lend 20, $30 million at a time, right? To go out and expand and grow businesses. They kind of want to lend money to people who don't even necessarily need it at certain points. So if you want to expand on Doug's question there, I mean, the question is, why would you raise capital 12 to 15%? It's a fair question, right? But there's a good explanation for it. So
yeah, we haven't been asked that in a while. We used to get asked that question
yeah,
more frequently. So the simple answer is this. Banks and lending institutions are not in the business of lending to small businesses or startups or even small businesses growing into medium-sized businesses unless they have lots of capital, they have a strong track record, 3 to 5+ years of history, strong financials, and quite frankly, they're willing to lend you money when you actually don't need it. When you need it, they're less likely or less willing to lend capital. But they're certainly not interested in funding, startups or early stage businesses, or new ventures or something that's outside of their what I call it a buy box sometimes, but their lending box. In other words, if you don't check all the boxes for what they look for as far as who they want to lend to, you're not going to get a bank loan or institutional loan. I mean, there are some lending institutions out there that do provide loans for small and growing businesses, but it's not the type of capital that we need. So what a lot of companies do, and I shouldn't say most, but it could be most, what a lot of companies do when they need to raise capital, they go out to the private market, not the public market, but the private market, private individuals, and they raise capital either by selling shares through equity capital, or they raise capital through debt, and that's the promissory note or debt capital. I chose to go the debt capital route just so Norada Capital could retain all the equity in these growing ventures that we're involved in. So the 12% and the 15%, it is almost like an arbitrary number. It could have been 11 and 14, it could have been 10 and 12.
yeah,
It's just at the time I was looking for the numbers that would allow me to raise capital quickly because we had a timeline on our initial acquisitions, that being Pier 1 Imports, Linens and Things, and a few others actually as well. So when we were going after those ecom businesses, we had a finite timeline. We were on the clock, and we had to reach a certain dollar amount by a certain period of time. And so that is why I came up with the 12 and 50% model that Nate was showing earlier in the webinar. It's because we needed to raise the capital and raise it quickly And those numbers were very attractive. That type of yield allowed us to get the attention of the people who were looking to deploy capital and try to make a decision whether they should invest in, this fund or that fund, or, a CD or a savings account, or, the stock market, or whatever it may be. So,
Yeah.
so that's why it's 12 or 15%. And, I could have changed that, and I could have changed it many times. I didn't. I kept it as it is because we're still in growth mode. Now we've scaled back dramatically our acquisition mode. We're not really looking for any new deals right now. We're really focused, or hyper focused, on building and scaling the existing businesses that we have in the portfolio. A lot of them I'm a direct partner in. I might be a board member on. I might be a co-founder. I'm definitely a partner in many of these ventures, and so I have a hand in them, and to some degree a level of control between me and my partners. In some cases, it's only three partners, me and two other people. We have a lot of control. Like when you look at Money Is, Level Up Real Estate, and Aspire, it's essentially three people, like three people driving it. And that would be myself, Eddie, and Andrew. So, Doug, long answer to your question, but essentially, the reason for the 12 and 15% is so we can raise capital, make it interesting and exciting for you, and allow us to hit our milestones each and every month in the capital raising. So that's the answer. That's the long answer.
Yeah. Yeah. And I think to kind of wrap it up in a bow as well, I always explain to investors as well, when you're doing a private raise, there's a lot of competition out there, right? So, let's say that they're considering us versus a syndication. A syndication might pay you 8% or 9% on the back end. You have to wait 5 years to get to that double-digit return. You chose to raise debt, not giving out any equity position. So to make it competitive, you're paying a strong cash on cash return on the front end of the deal, as opposed to having to wait 5 years to get that full payout, right? And that payout on different deals is predicated upon the valuation of that deal, or the commercial deal, or something like that. So it's a competitive way of raising capital.
Yeah.
Um,
There's a
Go ahead,
Nate,
Marco.
if I can just jump in here.
Yeah,
There's a lot of questions, and a lot of great questions, and a lot of the questions are actually really short, and
yeah,
they're easy to answer and quick. So I'd like to hit those real quick and just bang those ones out. But whoever has got the initial A, you've got like two posts, and they're very long. All really good questions. I would almost like to have a conversation with you one-to-one, because you sound very sophisticated. These are all really good questions, and the answers to
yeah,
some or many of these questions are actually coming out over the next 2, 3, 4 weeks in various formats. And so it's going to be a long answer, and not necessarily out of the scope of this webinar, but I think it's too deep, and it's very rich and deep to get into all this, because it's probably an hour conversation. But if you don't mind, whoever A is, if you could just reach out to me, let's just get on a call and I'll go through these with you. Nate, we should just screenshot this or something, or maybe just copy and paste it.
yeah. And I'll type in.
That's a lot.
Yeah, I'm gonna type in my email address as well, so they can reach out to me, and we can connect on this.
Just send that privately, not publicly.
Bam. Yep.
Yep. All right, I'm gonna keep going down the list of questions because we have a whole bunch of them. Oh well, where to go? Oren. Okay, things are moving around here. The company's still up in Orlando,
Answer the
correct?
question.
No, we're based in Orange County, California. Norada Capital is. The company, the LLC, has a nexus in Wyoming. It's a Wyoming-based LLC. We're headquartered in Orange County, California. The Orlando thing you're talking about is actually Jacksonville. That's probably what you're thinking of. And I'm here right now, south of Jacksonville as we speak. Ponte Vedra, Nocatee specifically, but Ponte Vedra is where we have our offices for the mastermind businesses. So Aspire, Money Is, and Level Up Real Estate. Those are headquartered here because we have about 70 or 80 staff that are at our headquarters just 10 minutes from here, that operate our monthly events. They're actually weekly events because we have events going on all the time. It's Aspire, the master classes that go on every weekend, and then the 4 masterminds for Money Is and the 4 masterminds for Level Up. So that's all based here in North Florida. So Oren, thank you. Craig, do you get the 5% bonus for all time periods? Yes. However, your invested principal has to be 200,000 or above. So you don't actually qualify for the 5% bonus until you aggregate a $200,000 investment.
Yeah, so minimum 3-year investment to get the 5% bonus. So all time periods, yes, 3 through 7 years, but it's a minimum of 3-year commitment.
Yeah. Lucas, is your company accepting partners at this time? I'm not exactly sure what you mean, but no, we're not bringing on partners. If you're talking about an investment of capital in exchange for equity in the company, not at this time. It's an idea that I've kicked around more recently, and I'm not going to get into that here today, but in the coming months, we'll probably have some sort of spin on that idea. So stick around. But I'm kicking the idea around of potentially having LPs or whatnot. Lucas, just stay tuned. David, how many promissory notes have you issued, and have you ever had any defaults? Great question. Including all the notes that have been satisfied, like paid off, there's probably been 1,300-ish notes. Now, a third of those have been paid off and satisfied, and so those investors are gone. They're happy. Some of them come back and they reinvest because they can't find the yield elsewhere, and so that's just how it goes. But yeah, we've had a good number of investors and a good number of notes, and we get great reviews and whatnot all the time. In fact, just yesterday somebody emailed me saying, "Hey, if you ever need a testimonial or a reference or something like that, feel free to use my name," and I appreciated that. The other part of your question, defaults, no, 0. We've never had a default. I've never had a note default since 2012. Some of them have been late in repayment because they were attached to real estate. They were a real estate-based note, whether it's a fix and flip or a real estate project. So those sometimes can take a while because those they're secured, not unsecured. So they're attached to the real estate until the real estate is sold. You can't draw the funds out. You can't liquidate the equity in order to pay off the principal of the note. And sometimes it's a refinance. It's not just the equity, it's a refinance to pay off the existing notes. So no defaults, David. Thanks. If there's anything you want to interrupt me with, Nate, go ahead. Matt, yes, the recording will be sent out. Okay, so I'll just keep going unless I hear from you.
Yeah, Mike Mills asked Marco, best guess, how long do you see Norada Capital offering these notes? I mean, this particular offering, I think another 12 to 18 months, max, maybe 2 years, right? Yeah. So we're kind of I always talk about this like we're in a 4-quarter game. We're going into the 4th quarter, right? We've been raising capital quite a bit for the last 3-4 years. So great question there. Juan Carlos, I made a note here. You mentioned wanting to do 150K from your self-directed IRA, but you don't have a personal income of 200. I do have the income if we combine it with my wife, but we are not at the 300K level.
If you're combining it with your wife, it still counts.
Yeah, so not for, you have to beat up to 300 typically though for the accredited piece. Here's what I'd recommend. I'm going to type something in your question there. I would go to verifyinvestor.com. And I would give them a call. You'd be surprised how many people don't think that they're accredited, but figure out that they have the assets and some income and things in place to be accredited. Also, if you've been in our system over a year, let's say for some reason you don't meet the accreditation standards, but you're non-accredited, we do have a sister fund called the 506B fund that if as long as we've had an established relationship for a year, we can work with you. But it's got to be a year longer or more because that's per our attorneys, right? For non-accredited investors. So great question there. I can get with you on. I took your name down. Gerard
is asking tax purposes, does the fund issue K1s or 1099 INT each year? Good question. It's because it's interest income, you're going to get issued a 1099 every January. So yeah, by the end of January, you're just going to get a 1099 sent to you. And you just, if it's applicable, you report that wherever you need to report it, whether it's your personal tax return, a business tax return, if it's part of a business. If it's a self-directed retirement account, it may not be applicable because those are tax deferred or tax free. So,
Yeah.
but yeah, that's every January. Um,
Clark,
uh,
real quick, if you have a 100K 7-year note and a 100K and a 3-year note, would you qualify the 5% bonus? Yes, we can aggregate the total of both of those notes to qualify for that 5%. If one of them matures in 3 years and one of them matures in 7 years, you'd get probably like a prorated payout based on which one's maturing first. But yes, the aggregate total of those notes would qualify.
okay. You got another one, or there's a bunch of them
Oren
here?
says he wants to come join you in Florida, Ponte Vedra.
Oren, well, this is the money is mastermind. So these people have all paid 15,000 or more, but 15,000 is kind of the base membership fee to attend this event. So we don't do guest visits at this event because this is, you know, this is the full enchilada. This is where people migrate into or transition into or funnel into. But I would love to have you at an Aspire event. In fact, for I don't know what my limitations are here, even though I am a partner. But if there's an Aspire event coming up that's near you or you can attend, let me know. I'll just gratis you the you know, the ticket and the lanyard for it. And I guess I can just extend that to anybody on here within reason. I mean, I can't give out 1,000 of them, but yeah, I would love to have you just see what's going on under the hood.
Yeah, we've got Miami in May and you've got Orlando in June. So you've got
New York in July.
New York
Just
in
go to
July.
aspiretour.com, and we'll usually have 4 months out. So we'll keep posting new cities and new venues. We just did Denver. We did Dallas before that. We had 4,200 people at Dallas. Denver was 2,200 people, maybe more. Actually, for all I know, it was the 3,100 people there. But anyway, MB, are you only accepting investments from individuals, or can private companies also take advantage of the promissory notes? Yes, it doesn't matter where the funds come from, as long as it's a US based, if it's an entity with a US based bank account, then it's fine. So that could be a personal account, checking or savings. It could be a business account, checking or savings. It could be a retirement account, self-directed retirement account, anything. It really doesn't matter where it's coming from, as long as you've got a tax ID number of some kind, and it's a US based bank account, because we send the payments through Wells Fargo Direct Pay. It's automatically deposited into your account every month. And so as long as you meet that criteria, and of course, you know, for this particular fund, you qualify as accredited, then you're good to go.
One thing to add to that, Marco. Oh,
Yeah.
sorry, go ahead.
We might be saying the same thing, so you go first.
Yeah, we do work with some corporations, like some LLCs. Now, what I recommend is getting that LLC registered as an accredited LLC, right? You can get an LOA, a letter of accreditation for that LLC, but we would still need that, some type of confirmation that the LLC is accredited or the business is accredited. So
Yeah.
I'm not sure what you were going to say, Marco, but yeah.
I was going to make a quick comment about accreditation. You started talking about this, but I don't think you really finished it. It's amazing to me how many people I talk to on the phone, when I was talking to more people on the phone, that are accredited and they don't realize they're accredited investors. And what I mean by that is this: you qualify either by the income approach, 2 years of a certain amount of income between you and your spouse, or by your total net worth. And that's everything that has value, that whether it's liquid or illiquid, it doesn't matter, excluding your principal residence. I talk to people, and when I ask them a few questions, they start adding up everything that they've got, you know, from investments to real estate to you name it. and all of a sudden they realize they're accredited. And the big one people get hung up on is their business. If they have a small or medium-sized business and they own equity in it, even if you're just a part owner, not a 100% owner of a business, that business, if it's a viable business, has a value. And so whether you own 30% of it or 100% of it, what is the value of that business? And then, multiply it by your percent ownership. And that is what is on your net worth as well. So if you have a $2 million business and you own 50% of it with a partner, you're already accredited because you already have $1 million net worth in that business, assuming that, that's the net value on a sale. If you're saddled in debt, well, maybe it's not there. But don't forget about the businesses you own, the equity you own in businesses, because that has value too. So a lot of people are accredited and they just don't realize it.
Yep.
Um, I don't know
Let's
what
see here.
Lucas is saying. Do you deal in trade acceptance? I'm not sure what that is. Sorry, Lucas. Uh, Matt says, please say where you go to become accredited investor. It's just the qualification we were talking about before. But if you think you might be, or you are, you can go to verifyinvestor.com and you can have it done same day. Like you'll just get an accreditation letter same day. So that's pretty
I
quick.
just type an answer, and I'll put that in the chat box as well, guys. It's not hard to do. You just go here.
Yeah. Bob says that the company sounds like a very, I think you meant to say solid, firm, and stable company. My question is, how would an individual lose money with your company? Um, Given, the number of assets and the asset value relative to the debt on the books, what are referred to as debt to asset ratio, it's hard to see a failure, even if one of our companies are struggling, or we have to sell it off or close it down, or something happens to one of our assets, one of our companies. It's a dent in the bucket, but it's not, going to impact us. The greatest thing I'm concerned about are what I refer to as major events or black swan events, like a world war, a regional war, a hot war, a global recession, a major economic impact, another black swan event like a September 11th, a COVID. Things like that will definitely have an impact, sometimes positive, not necessarily negative, but has an impact on various industries and certain markets. And so those are the things that I worry about. But the path that we're on, the trajectory that we have, the growth that we're seeing, we're reaching various tipping points this year where a lot of our companies are flipping to profitability, and that just means more revenue, more income for us, and profitability and increased valuations. So, Bob, maybe a bit of a long answer to your question, but that's that's my answer to that question. Well, let's grab one more, I guess. So two people asked debt to asset ratio. I was actually trying to pull up while you were talking, Nate, the most recent balance sheet. So I don't have it in front of me. But I believe it's 3 to 1. Like our debt stack is about 1/3 of our assets, assets on the books, assets on the balance sheet. So the debt to asset ratio is about 1/3. So that's Jim. Thank you. And then who else asked that? Candida.
Yeah.
Yeah. So thanks for that.
And I know sorry guys, it's hard to get to every single question. There's a lot of questions that come in. So I know we're at the top of the hour. Mark, I don't know what your timing's like. I can answer a few more of these if you'd like, but
I have another call to go to, and then I have a Zoom meeting at 3:30. So
okay, I'm gonna answer Matt's real quick then.
yeah.
Matt, accredited investor is quite simple, my friend. There's an income approach or there is a net worth approach. If you're an accredited investor in the SEC's eyes, it's $200,000 in income for the previous 2 years individually, 300,000 combined with your spouse, or you have a net worth over $1 million, excluding your personal residence. I put a link in the chat box to a company called verifyinvestor.com. They can verify you quite quickly, usually within 24 to 48 hours. So if it's something you're thinking about doing, it's a great service. It's probably less expensive than going through like your CPA. It's a great question there. Sonia asks, hi Marco, are you easily able to exit or sell shares of equity in business you're involved in? The reason I ask is something in the future happens with one of your business partners, or you simply want to exit and move on to other businesses. I think ultimately that question is about, it's what happens if there's like some type of situation that comes up that's you need to, easily exit out of some of these businesses and get an influx of cash. Marco, you would know that. You can speak more to that. I would think, yes, you could probably sell your position in these companies if you wanted to, but
Yeah, that topic actually has come up a few months ago with one of my partners as valuations for some of these businesses increase. The business itself, that company or that business itself can raise capital at a higher valuation if we wanted to have a cash or liquidity event, like an injection of capital. Also, any shareholder, again, it's not publicly traded, it would be a private transaction, but whether it's Norada Capital or someone else, another one of my partners or investors within those businesses, we're unless there's a restriction contractually, we're free to sell our shares or raise capital by selling shares in equity. So that's just another way of raising capital, almost like internally rather than looking for capital externally. We're just basically taking equity from one of our assets and selling it to other investors and bringing them into that, that specific entity or that business within our holding company, basically Norada Capital.
yeah, good question, Sonia. Chris asked about, how Norada Capital is paying 12%. We are a zero fee fund, by the way, Chris. So we're not collecting fees on the top or anything like that. 100% of your principal goes to work for you. And the way that Norada Capital makes money is by arbitrage, right? As we raise capital, we put into the businesses create profitability and revenue, and they're higher enough yield to pay back 12 to 15%, right? So there's no magic wand or anything like that. And Marco, if you want to speak to that, you certainly can as well. But
no, I think you hit the nail on the head. I already answered that earlier today.
yeah.
So
let's see. Any others you want to hit on here, Marco?
Roberts, I think is a repeat. I need to learn how to get my business accredited. It's not the business that is accredited. I mean, yeah, actually, technically it can be. I believe,
Yeah.
if it has a $5 million or more valuation, it's considered an accredited entity. So yeah, you might want to look into that, Robert, or just contact whoever your investment counselor is here with us, and we'll find out for you. We can always ask our securities attorney for the answer if we don't know. So I'll just take one more here. Tyson, does Norada Capital have 100% ownership of the businesses in the portfolio, or are they owned via multi-member entities? For the most part, most of them are not 100% ownership. They'll range from whatever it may be, just depending on the entity, from let's say 11% to 33%. Some of them are entirely owned, like 100%. So it varies, but there are partners within each business that stands on its own. It's its own operating business. It has its own P&L. It has its own books. It has its own management team, etc. Sometimes that's shared between several entities, like on the e-com side. We'll share some of the people involved on the executive level, management level, and operations team and marketing team. So there's cross-pollination because it's all in the family. But no, our equity ownership in the various entities varies. So
Yeah.
All right. I think that's about it, Nate. I think we should wrap it up.
So as we wrap up here, just real quick, I want to go over a couple things. I want to share my screen one more time here. And if you guys, if you've been talking to us and you're at that point where you're ready to get started, quite simple. There's a link to what's called a profile form online, right? This is the complete your investor profile form. It's noradacapital.com/profile. This takes 5 minutes to fill out. This will kick back a contract to you within 10 minutes from our DocuSign system. That's just you raising your hand saying, hey, I'd like to get started. Here's my term I'm looking at. Here's the amount I'm looking to invest. you don't have to sign right away. It doesn't mean you're signing as capital right away. It just says, hey, I'm raising my hand and committing to this. We'll obviously confirm everything with you. We get updates on our end, and we'll correct titling, we'll correct dates, amounts, things like that. But this is how you get started with the actual process of investing with us, right? And so you fill this out, we complete the contract with you, you sign, Marco signs, and it's as simple as, you know, wiring money to Norada to actually get the process started. We do what's called a prorated payment. So let's say hypothetically I'm investing $100,000. I do a contract today, and then I fund on the 15th of this month, right? I'll get a prorated payment for the rest of April, plus my first payment in May. Right, the contract date would be May 1st, but I'll usually get two payments. I get a prorated payment for the initial capital that's hit the books here, and then I'll get that first payment for the actual term. Right, let's say you do a 3-year note. There's 36 payments, so payment 1 of 36 will hit as well in that same week. But that link again, I'll put in the chat box. Super simple to get the process started. And if you're to that point, you've probably talked to me, you've talked to Michael at some point, or John. Oh, that was right to Marcus. Sorry, guys. Everyone there. Get that to everyone. But that's the process, guys. And if you have questions, again, reach out to us. You can go to our website, fill out the chat form there, use the chat widget, and we'll keep the ball moving forward. Marco, I appreciate the time today. I know you're traveling and you're at your live events there. So say hi to Eddie and Andrew for me.
Yeah,
And,
I will.
Yeah, we'll talk soon.
Thanks, everybody. Appreciate your time.
All right,
Thanks.
take care, guys. Be well. Bye-bye.